As part of events marking the 2016 Oracle Digital Day with the theme Innovation to Grow, Insight to Control, Oracle, in collaboration with BlueChip Technologies and CNBC Africa, organized the Oracle CEO Summit to share business insights on driving digital business agility during tough economic times. I am Wole Famrewa, and the panelists for the discussion are the Executive Director and Chief Financial Officer of Sterling Bank, Abubakar Suleiman, Group Managing Director and CEO of Diamond Bank, Uzoma Dozier, CEO of Financial Derivatives Company, Bismarck Rewane, Managing Director, AfriInvest West Africa, Ike Chioke, Oracle Nigeria Country Manager, Adebayo Sani, and the moderator of the panel discussion, McKinsey & Company Senior Engagement Officer and co-lead of the Digital McKinsey practice in Lagos, Chika Ekagi.
Earlier on, Ike raised a very good point around the legal and regulatory processes actually potentially limiting the kinds of innovations that we can introduce in this market, which maybe the market is ready for.
Yes.
So let me refer back to Uzoma here and share with us a few. Where are the areas that the government actually can help businesses drive this innovation? Where are the policy areas that maybe the intervention should come from? What kind of support should the public sector be thinking about introducing or giving?
Good question. I think government's primary responsibility is to create an enabling environment for business, regardless of the sector. In Nigeria, especially in the financial services area, I think, unfortunately, the news you hear about Nigeria most times is about either capital issues, liquidity issue in banks, and stress. But when it comes to innovation in the payment space, I think we've done much more than most people in this continent or outside this continent realize. So I'll take Kenya and M-Pesa. So M-Pesa, everyone talks about mobile money, how fantastic mobile money is. But our view in Nigeria, in Diamond Bank, is that mobile money is a stopgap to full digital financial services. And so you find a couple of banks in Nigeria have actually deployed full digital banking financial services. So it means that it is not just mobile money where it's a glorified transfer mechanism of cash. It is actual full financial services. You open an account on digitally. You can transfer money to anybody in Nigeria that has a bank account, and you can also receive money. Because what we've built in Nigeria is actually a very efficient payment system where I can transfer money to my friend here from Sterling Bank, and he receives the money immediately. So it means that if you actually do things right, the need for expensive devices like POS terminal, you can actually leapfrog that and not invest in that. But because we're actually copying some Western infrastructure that we do not need, because we do not have the barrier of legacy systems in Nigeria, which actually leapfrog some things. We have built this efficient system, and then if you look at, I'm sure Bismarck will tell you about our low credit to GDP. So we are a very unborrowed nation when it comes to the population. But then, central bank, for example, has a very good financial inclusion strategy. But it means that anybody in Nigeria can actually open a bank account now, wherever they are, because you have a regulation that allows banks to partner with telcos to roll out financial services. But then again, if you want to borrow, then you now have to go and find a bank to actually get your biometric verification. So it now actually creates a high barrier for people to borrow, because you have to now go into a bank to do that. So there are very good policies, but there is no collaboration between the different entities of government. So if you have the tax authorities, the financial regulators, the federal regulation, different policies that actually sometimes makes it actually very difficult for collaboration of different systems that have been put in place. So we're not going to lend as much as we can in this market because it's going to be very expensive, which is going to exclude a lot of people, especially lower down the pyramid. We are not going to be as innovative as we can unless a lot of legislation, especially around payments, especially around as well digital. So if we talk about corruption, for example, if the government says today, for one, all payments above 10,000 naira should be done through a bank account, we can actually do that in Nigeria because we actually have deployed that infrastructure. It is very, very easy to do. And that would mean immediately, like, to move money outside that financial sector will be very, very difficult. So those are some of the things that will, first of all, also bring more people into the into the formal sector, and it will now bring more players into this market to actually innovate, carry on the continuous innovation.
Collaboration among the different arms of government, I think a very important point that you mentioned. So then I suppose a question to you, and I'd love to get some perspective, Abubakar. How is the industry trying to influence that? How is the financial services industry working with the public sector to say, hey, these are the things we need, what's the forum for that, and how's that coming?
Uzoma made a point about how innovative the Nigerian banking system has become. A couple of days ago, a Sterling Bank payment innovation was the runner-up in an award in Barcelona. It was a global award that retail bankers from across the world voted for, and we came second. And the Nigerian media had no inkling, and neither was anybody interested. I think the point is that we're actually exceptionally innovative. And if you talk to people who have deployed solutions into Nigeria, they found that the Nigerian banks have driven those solutions into areas they had not even considered before. On the regulatory side, my concern is that we are facing a genuine risk in two ways. The first risk is that if we do not change the approach to regulation and begin to look at innovation as a way to protect the country, we would have a lot of the services that are offered in Nigeria today would become outsourced offshore. It will be done elsewhere, because suddenly it won't matter anymore which part of the world you are. The second problem that we have with the regulators, not, in my view, being more open to innovation, is that there will be bypasses that will be created within the financial services sector, where people who are not regulated by them would suddenly be carrying out a lot more activities than those who are regulated, and then the effect of regulatory tools or their monetary policy or fiscal policy will become weakened because they can no longer they don't serve as a transmission mechanism the way that banks serve. So they really do need to wake up. How are we collaborating or working with them to do this? I had a discussion recently with one of the major players in the IT industry to organize an event to bring the regulators from a different sector and to open them up to the idea of digitization as a risk management tool. Because to speak to the regulator, you must first start from the concept of managing the risk. That is their primary responsibility. And then to walk them through that, to begin to see why, for Nigeria to become competitive, for us to be able to build certain aspects of our businesses. And the IT sector, for instance, is one area where there's significant opportunity for creating employment. We need to carry them on that journey. It may take a while, but at least they begin to think in that regard, and hopefully they will understand us better when we come to them with innovative ideas.
Thank you very much. So, collaboration in the public sector is very critical, very important. But similarly, collaboration on the private sector as well, and within the partner ecosystem, will fuel a lot of the innovations that will come through. So, one question that I'd love to ask actually all of you, and sort of in order, when you think about the partners that you work with, what are some of the ways that you're collaborating with them to try to reduce the cost of doing business, make things a little bit more efficient, and also open new markets and new opportunities to help grow the top line? And, you know, we'll start with you again. If you don't mind, we'll just walk down and hear from you.
We found that we've continued to rebuilding the same solution that we could have built once. However, there are instances where we've collaborated very well, and it has had to do with working towards companies like NIPS and the CSCS, for instance, where we jointly set up and we work together. We're also seeing the same level of collaboration through the mortgage refinancing company, NMRC. So it's clear to me that it's very difficult for any one of us to lead a collaborative effort, but it is easier for us to set up an independent vehicle that would then lead collaboration. I think that's what we've done well. I think NIPS, for instance, has taken collaboration amongst banks to a different level, and we're beginning to see some of the result of that. We've also seen the central bank essentially encourage banks to work together across certain areas, especially with cost management. And I think we'll see some of those results in the coming years.
Those are my thoughts.
I think Abubakar has mentioned the key part of providing services is also a shared cost infrastructure. So I think working with other banks, organizations like NIBS has provided this efficient payment platform that allows us to make payments across Nigeria in a very cost-effective manner. But there's also the sustainability arm, where we know that as a bank, you cannot we don't view banking anymore. Especially in that moment, we don't view banking anymore as just providing banking services, because if that's all you're doing now, that's your strategy, you're going to be out of business in the next 5 to 10 years. Because if you look at different aspects of banking, which is other deposits, transaction, providing transaction capability and lending, there are different businesses within and outside financial services that are actually doing that. So for us, it is looking at what our customers are doing, and then how do we now provide a bundled service to them. That is working with different types of businesses. And then, because we're trying to also provide digital services to our customers, there's a lot of education that needs to be done. So like, if we look at the areas that where the opportunities are in Nigeria, there's opportunities in the consumer space, there's big opportunity in the small business space. And then what the small businesses want, they want access to finance, access to market, and access to advisory services. So you have to be able to provide these services. But as a bank, you can't do it by yourself. So you now need to collaborate with partners that, first of all, technology partners first, because you have to provide that digital platform. And gone are the days where you have this big, massive IT department because nobody else could do it for you. You actually have to outsource that. You have to, you're involved in educating your customers to use services, either to improve their businesses or to teach them how to borrow money and pay back. So that capacity building part, expertise, is not what we have in-house or what we want to build. There are people who can do that. So we are involved in a lot of collaboration with different partners. And you find sometimes that, we've seen where you have a customer who has, so I'll give you an example. We have customers who have a big footprint, big infrastructure, and a big customer base. So you start working together. So they're your customers, then they become your collaborators, and before you know it, they can be competition. So you actually always want to stop that transition from collaborator to competition by creating an infrastructure that enables a win-win situation, or else the next thing you know, you're actually competing for share of customers' wallet from a different perspective.
Bismarck, any thoughts you have?
We're looking at the payment and settlement system and how that can help businesses actually expand the market. But it's also relevant to think of the payment and settlement system in the broad context of economic resilience, in the sense that in classical economics, we have what they call the quantity theory of money, which means that you have money supply, and the velocity of circulation is what drives the number of transactions and level of economic activity. The higher the velocity of circulation, the higher the number of transactions, and the higher the productivity and growth in that economy. So by reducing the clearing days from 21 to 5 to 4 to 3, essentially you have 17 trillion naira of money supply, and it's turning around much more efficiently. You've reduced the maximum amount on a check to 10 million naira. So we've seen value of checks, right, actually reduce in the clearinghouse, while the number of transactions on the POS and electronic settlement has actually grown. All of these things mean that the economy is becoming more resilient. And if you take economic resilience at a macro level and look at a country like Kenya and a country like Nigeria, Nigeria and Kenya suffered from Boko Haram and Al-Shabaab activity at the same time. But the Kenyan economy showed greater resilience because of the M-Pesa settlement system, which means that you don't need a bank account. All you need is a mobile phone, and you transact your business with Safari.com. And you look at the growth trajectory of Kenya, with an economy which is only about $80 to $90 billion, and has been able to sustain itself. It's only yesterday, for the first time in so many months, that they had an inflation spike. Everything has been going, so inflation has been going down, growth has been increasing in spite of the threat of terrorism. And the economy is diversified, and the settlement system supports it, and that shows resilience. On the same time, we had the Boko Haram situation here, contracting economic activity, and we saw that sharp fall. And there was a lack of resilience in the economy because of suboptimality, right? Now we're moving in the right direction, and I just don't want to, you talked about the collaboration between government and business, and that's where it comes in, that these solutions are not just business solutions. It is business to government solutions that will help ensure that the greater the velocity of circulation, the more resilient the economy. And more importantly, you look at the bulk of our credits in Nigeria are short-term. And what are short-term credits for? It's for inventory and receivables. But if the settlement system is efficient, then the receivables management actually, aggregate receivables actually reduce. So, and that money will be available for the banks to lend for long term, right? And even into underwriting issues, and things in the market, capital market space. Because right now money is sterilized and tied down to fund receivables and inventories. And you take away the receivable element quotient of that equation, then you have more available for growth and other activities. So one has to look at it. One, is innovation and technology good? Yes, it is good for business. Two, is it good for the economy? Yes, it creates resilience. Is it good for efficiency for the government? Yes. And does it create collaboration between government and the private sector? You got it.
Thank you very much. Mike.
When you look at the investing space, we're in an environment today where there's sort of lack of investor confidence. And yet you feel that there's still money in the system that could be better utilized if we could shorten the settlement cycle. I'll give you an example. If a company today wants to do an initial public offer of their shares, the law, the Investment and Securities Act, still states that the evidence of share ownership is your share certificate. Now, if I give you a certificate, I know for a fact that you cannot trade those shares. So it's actually more efficient for me to be able to give you an electronic share that settles directly into your CSS account. Therein is a dilemma, and we face in the market where there's technology today available to allow me to issue the shares and get people to subscribe electronically, and those shares can be delivered electronically to their CSS account. But I have a law that states I must give a certificate. And so we're now trying to marry those two areas, and I'm leading an initiative of issuing houses, discussing with the SEC, discussing with the stock exchange to say that perhaps you can give some kind of statement, a statement to the shareholder saying that yes, you've got the shares, but actually these shares are in the CSS system, which is one of the initiatives that were created in the financial services sector to allow efficient settlement of securities and transactions. Because if I have to do it manually, we then get into the scenario Bismarck explained. You fill a form, there are millions of people that have subscribed. It takes me weeks or months to go through all the forms. Then you've actually paid for the shares. It takes me maybe 30 days to come back and determine how many people have paid and the allotment process and all of that. Whereas if I could push you all to a CSS account, it means that automatically everybody has a broker, and essentially during that public offer, all I'm seeing are the brokers who are registered real-time online on the NSE system. I can see the demand they've put in, I can see my order book, I can actually see my clearing price, and settle T+3, all the shares are allotted. If everybody is going to get 80% allocation, it automatically goes and debits all those accounts by 80% of the cash put up, and everybody gets the shares, and my client gets the cash. And those are some of the innovations that are actually available today with the technology we have built, but the regulation has not caught up. And so the onus is on us as stakeholders to work with the government. The SEC is on it. We're talking to the Ministry of Finance, the stock exchange is on it to align the regulatory aspects of the two agencies, and then to see how we can then make modifications to the ISA, Investment and Securities Act, so that this new paradigm can take effect. And I suppose for all of us, we have to continue to push the federal government and all the state government to continue to evaluate their rules and laws to see how technology have made them somewhat redundant, and how to sort of change those laws to be sort of 21st century laws and move forward. Otherwise, we'll never really leverage on the ability to leapfrog to the new level. We'll be perpetually trying to follow the track that's been set by most of the Western industrialized economies 30, 40 years ago, when we can actually leapfrog and be ahead of them, like the banking sector has done in Nigeria.
Bayo, any thoughts to it?
It's actually exciting to see at a time like this that we are having conversation around the role of technology, and now innovation is a change in the way we live, play, work, and learn. And it's interesting when we look at partnership, and I'm looking at the panelists, and we look at the financial services sector from an Oracle point of view, and I'm going to speak slightly as an outsider, when we compare the rest of the panel. And we look at, as a technology provider, when we look at working across the aisle, irrespective of the sector. I mentioned during my speech earlier on, when we talk about collaboration as part of the key tool to support cost reduction for a lot of companies that need to actually survive at a time like this. So when we look at organizations like Oracle, and now we partner across the different sectors. We look at both the private as well as the public sector. From a private point of view, if we take, for example, the telco space, our conversation with the telcos right now, where they start to look at the cost of voice is really going down, is almost becoming zero. And the discussion is really, how do we partner with the likes of technology organizations like Oracle to help monetize data. So that partnership, that collaboration is really what is helping to actually support the telco sector in terms of moving away from really how am I going to get my next wave of revenue, to really collaborating and looking at monetizing data that is almost the tool that is being used today, as we said earlier on the oil. When we look at the financial services sector, it's really partnership with a lot of the banking sector, and Uzoma is there, Abakatu is there from Sterling Bank. And the reality is really conversation around how do we partner with the banks and start to look at reducing the end of day, the end of month, what specific Oracle solutions can be deployed to be able to do that. How do you know your customer more by deploying specific solutions like big data, for example. Now we look at the public sector, and the conversation is today, the government is saying there's no money, but the key aspect is we need to drive revenue. And so how do we start to look at those MDAs, those government agencies that are revenue generating, and how do we partner with them to provide solutions specifically that is driving productivity, that is removing wastage within the government, that is driving shared services within the government. So partnership with the government and collaboration in that regard is key, making sure that at the end of the day, they're able to double or triple the revenue in which they're making for the government, and this obviously helps stimulate the economy. But as he mentioned earlier, the biggest challenge that we start to face is really the policies of the government. When you look at it today, is not in line with 21st century, as you just mentioned. The policies of the government must be in line to encourage a lot of companies, a lot of collaboration, to foster encouraging a lot of companies to be able to do much better. So this is what we're doing.
Thank you very much.
The rest of the discussion on driving digital business agility during tough economic times continues shortly. Welcome back. If you're just joining us, you're watching a panel discussion from the 2016 Oracle CEO Summit, which took place on the sidelines of the 2016 Oracle Digital Day.
So this is really great. I think an area I'd love to get some perspective from you on are actually around some of the more globally renowned innovations that are on the table. How you see those applications being used locally here. For example, with big data and advanced analytics, what are some of the observations you've made about its applicability in Nigeria? But along the same lines, I'd actually be curious to hear technologies and or innovations that you think we are not ready for as an economy or as a people. Less so the government side, but more so as a people. And then maybe when do you think we'll be ready for that? So what do you think, Abubakar?
I would actually like to focus a bit on data, because there's a sense that we've focused on the customer end of innovation. The trouble I have with data today, and I think a lot of the Nigerian companies have, is first and foremost the quality of the data. So we've not collected the right data over a period of time. If you look at it from the identity data, for instance, I was pointing out how we have different kinds of data in different places. So you've got the BVN, it's an identity data. You've got the national identity card. You now have the validation by the telcos, which could also serve as a form of an identity data. There is a need to harmonize all of this information, because at the end of the day, until you can actually resolve the identity issue, a lot of the service issues will suffer. And it's also true of internal data collected by corporates. A lot of our data, unfortunately, does not meet the standard for predictive work. The second problem, which is an even bigger problem, is that we do not have people who have been trained to interpret data. So a lot of data is collected, but how you apply this data, how you interpret the data, is increasingly becoming a problem for us. So we need to look internally and see how our people, first of all, transit from a mindset of relying on experience and rule of thumb to a mindset of relying on data. If we can't rely on data with absolute confidence, then how can our customers rely on an outcome that is based on data, especially in financial transactions? That is a big one. The other point is, what are the innovations that are here already that we're not ready for? Increasingly, when we use that phrase, I like to think of Nigeria as two different countries in one. There's an aspect of Nigeria that is ready for just about any innovation you can put out there. All you need to do is put it out there, and you see the adoption. For instance, before ChatPay, which is a payment platform that operates from the communication, your usual chat communication, whether it is WeChat or it's Messenger, before we launched it, we were convinced that only the very young people would really be interested, and we thought it was an exciting way. What we found out was that there were a lot of matured people who actually were interested in this option. So there is that aspect of Nigeria that is ready for any innovation you can put out there. There's, however, a more matured part of the country, which is the corporate Nigeria, which is less reluctant. We're more reluctant to adopt new technologies. And the process for getting them to come on board is a lot more tedious. So when we say that they're not ready for the innovation, it means that the cost of getting them on board is so high, because you cannot be digitizing and innovating at one end, and at the other end, you still have to sell this on a case-by-case basis to get people on board, especially at the retail level. That kind of solution does not make economic sense. So we're ready for just about every innovation, for as long as the regulators are ready to enable the companies to perform. I am almost certain that give 6 months, for example, if changes are made in the SEC laws that regulate how certificates are digitized, 6 months' time, you would find that 90% of the people would actually move there. I don't think it would take a year. Payment platforms, over 90% of our payments are now processed on alternative channels, and less than 10% go through the branches. So I think the country is ready for innovation and digitization.
What Nigeria needs is actually innovation. And innovation, not from innovation from even the way we think, innovation from how we take technology and customize it to the how our customers consume, go about their lifestyle. And so you find that, for example, you find that most banking innovation is actually coming out of Africa and South America, and that's because you have more people outside formal sector than in the formal sector. So how do you get them banking cost effectively? So if you take UK for instance, to open a bank account is very easy. There's a bank account, the bank branch anywhere, so you can just walk in and open an account. But in Nigeria, the case is different. So you find that, as I'll use Diamond Bank for example. So we have 12 million customers. So in 25 years this year. So in 22 years, it took us 22 years actually to acquire 5 million customers. And in 2 years, so in the last 2 years, we've acquired 6 million customers. And we've done it in a very cost-effective manner. They didn't walk into Diamond Bank. They didn't fill up any paper. They actually went on their mobile phones and actually were acquired, or somebody went to them. So, and that's innovation for you. And so, because you cannot, Nigeria requires a lot of innovation. And for example, I'll take education, for instance, where there is a dearth of infrastructure. But you cannot do it the old way anymore. You cannot build new schools. You cannot use books or start importing books anymore. You have to now be very innovative there. How do we actually use different types of devices to actually teach people, and how do we redefine the classroom? So it's not about physical locations anymore. It's about maybe people being at home and doing 2 or 3 hour lessons. But so there's innovation, there's technology, but if you do not have the underlying infrastructure to actually deploy it, then you can say that you're not actually ready for it. And so data is, for example, if you're not disciplined in collecting data, in cleaning data, then what it means is the proverbial garbage in, garbage out, wrong information, and then you're in big trouble.
So thank you very much for that. I think that is quite exciting. And to tie back to the question you raised around the people, the capabilities, right, to interpret the data and everything, I'd love to learn how you organize internally in terms of your human capital to actually grow the capacity you need and or develop the capabilities to push into the more interesting data analytics. How are you thinking about that? And particularly given the education sector in Nigeria is what it is, are we still heavily sourcing from outside? Are we taking initiative within the banks to train people? What are some of the ways you're doing these in the banks?
Before, we actually wanted accountants. Now you're actually looking for analysts. So the profile of a banker is even changing. So that means the type of education. So so English and maths are important, but the ability to use, understand how to use devices is changing. And then the type of people that you employ. And this is where, of course, regulation becomes a problem in terms of human capacity development. So if you want to now, there's certain levels that you want of people that you need to employ, and part of the regulatory requirement is that for you to be a senior manager, you must have 20 years banking experience. But if you have 20 years banking experience, then that means you're the wrong person. You're the wrong person for that particular role, which is a new role, which is because our business is new. When it's now a digital economy, and so it's a new type of business requiring new skill sets. And so those are the challenges that you get. So there are frictions as well. So and so for us, it's now, how do we now change our grading system? So we'll have a grade system for the regulator. Then we'll have an internal grading system that enables us to hire the right people, pay them appropriately, and also ensure that there's satisfaction among the different workers. Because you need bankers, but you also need different type of skill sets to drive this type of new business that you were trying to achieve.
And Bismarck, you run a diversified firm. There are a number of different service lines and offerings. How are you thinking about the same problem? Are you doing something similar? Do you have other ideas about how you're building capacity? How do you manage that?
Before coming here this morning, we had a Forex dialogue, and they were talking about the impact of devaluation on segments of society. The economists came up with definition of what they call the chronic poor and the new poor. That is, those who were born poor and those who were made poor because of innovation. And those who are likely to be made poor because of innovation, right? So you are, and how to, what kind of intervention, welfareist programs are you going to take to take these people along? Because there are consequences. And I think that's the major challenge. So not a firm can render somebody redundant, pay him redundancy, but that guy goes into society and has no safety net to do anything and becomes dysfunctional. And if they're getting more and more of those people, then you have a aggregate of dysfunctionality which can disrupt society the way we want to see it. And so it's not it's not as simple. It has become a problem which has to be addressed, both from the policy making, but also from everybody's perspective.
So I think we have just a few minutes more, and I wanted to actually ask Bayo another question around the way Oracle going forward. If you think, project out 2 years, 3 years, 5 years, a lot of the people in this room are, they're thinking about the right things around innovation, around how they're going to grow their businesses, around how they can unlock policy. What are some of the ways that some of the solutions here can support even beyond what their own ambitions are today? So as this technology provider, and I spent some time at Microsoft many years ago, we would expect that, you go in there, you can actually see sometimes beyond what your clients will see. So what conversations are we going to be having in 2 or 3 years around technology, and where do you think that is going to go?
That's a really good question. If you look at, and going back to what we were saying earlier on, when you look at where Nigeria is as far as innovation or digitalization, I think we've been there for a while. If we look at what we've seen in the mobile sector over between 1960 and 2001, when we had roughly less than, I believe it was 40,000 lines, both mobile and fixed. And then you look at between 2001 and today, we have way over 100 million lines. The reality is the country itself is ready for change. And as we mentioned, innovation really means change. So when we start to look at the solutions that we look at in the future, it's not so much of the future, because the truth of it is that the future is now. I mentioned earlier on that the humanity itself will change so much in the next 20 years than we've seen since the beginning of time. So that future that we're referring to is really now. And the conversation that we'll continue to have is really how do we truly support a lot of our customers in being able to gain market share by looking at helping them reduce costs too as well, removing efficiencies in the system. It's also going back to what Abubakar mentioned when we talked about data. Data is the new oil, but the conversation is that how will organizations in the future and today be able to understand their own customer a lot more, to be able to prefer solutions that would truly be able to help them. And we have solutions today that is able to address what Abubakar mentioned in terms of, now I have the data, I have the unstructured data, I've been able to gather that data, but how do I interpret it? And this is some of the solutions that Oracle has today. So a lot of the discussions going forward will really be focused on cloud. Cloud, for me, is a key component of digital innovation that is truly going to help revolutionize the way we look at business today. Because at the end of the day, number one, it ends up reducing effectively cost significantly. The maintenance, all the expenditure that typically companies will spend on maintaining old infrastructure, sitting on 20 years of average application, would be removed. When you start to look at upgrades, patches, what a lot of companies typically look at, by moving to the cloud, it tends to reduce cost significantly. At the same time, it's reliable, it's extremely very secure. There's a prediction that Oracle CEO made a few weeks ago, and he said the enterprise cloud will become the most secure IT in the world in a few years. So it means that the biggest challenge that a lot of our customers are faced with when you look at cloud as a transformation, as a transformational process, is security. Now, if we're saying that we're predicting that this will be more secure, it means that as we look at the future, the conversation that we will be having and we are starting to have with our customers is really how do they start to adopt cloud and what is the future of that? Because it also helps flexibility, faster time to market, and the ability to truly drive innovation. So these are some of the conversations we're having today, and that is what is going to go on in the next few years, because cloud is here to stay. It is changing the way businesses are run. We're looking at, as a result of customers leveraging cloud, they're creating new business categories, but at the same time, it's helping them disrupt existing ones. And this is what we're going to see over the next few years.
Thank you very much, Bayo. Gentlemen, thank you very, very much for your time. If I'm not mistaken, I think we have exhausted the time we have, but it has been quite an enlightening conversation. I think some of the key points that we heard today, in no particular order. One, there is a very strong need for the regulation to actually catch up with what the businesses can do and to unlock that opportunity for the economy to go forward. Secondly, we should be optimistic about what we've achieved as a country. We're actually innovative ahead of our peers in many cases, and our need is driving what innovation looks like in the context here. But ultimately, there is room for us to collaborate more on the private sector side, to lead innovation in a sustainable way that somehow balances between us partnering with each other and not creating new competitors to come and attempt to take our market share. And I know when you step off this stage, you go back to being competitors. But as long as you are on this stage, thank you very, very much for joining us. And a round of applause for our panelists, please.
Everything you've said, you've been going to disruptive innovation. How about sustained innovation? Because definitely there are something we are doing well from the FSI sector and also from the derivative sector. We are definitely doing something well. What are those things that you want to continue to do?
The biggest challenge when we look at cost reduction is our ability to automate processes. We need to remove inefficiency. We need to ensure that customers are able to innovate a lot faster. Now, if our customers are able to do that, as far as Oracle is concerned, it makes it a lot easier for the customers in which they work with to be able to do that too as well, and with ease of doing business with them. So I think it's really important, as Oracle, we introduce specific solutions in that regard, and the key aspect of that truly helps transform that business. And that's really introducing solutions specifically that helps from a technology point of view, automate the processes in which our customers have today, and at the same time try and really take away inefficiencies absolutely in the system.
Let's take the one on sustained innovation. I think that one of the best things that has happened to Nigeria in the last couple of years is the introduction of the BVN. It sounds like a small innovation and something that people overlooked, but what it has done is that for the first time, it has placed the banking system in a position where all assets and all liabilities within the banking system are traceable. So unless you take something out of the banking system, it's now impossible for you to have assets or liabilities with owners that you cannot trace. And this is critical for a country that is going through the kind of reform we're seeking, the corruption battle for our life that we're fighting. We would like that to be sustained in the sense that if we could take that innovation and take it to the other asset classes, starting with capital market, for instance, and then moving it to real estate. Because if we could take all of the key assets in the country, and we can use these unique identifiers to trace them to the beneficial owner, the issue of KYC really becomes almost irrelevant, because it's almost impossible to have assets that you cannot trace to the beneficial owner. I think this is an innovation that we need to sustain, not as a financial services sector, but as a country. It is the shortcut to solving big problems for this country, and I think It's something that can be done. It is something that is cheap and affordable. If you combine the BVN with some element of blockchain today, we can create a national asset register that will be superior to anything that I see anywhere else in the world right now.
As members of your boards, and as you participate in your boards, what keeps the board up at night? What do you think about in terms of some of the trending or proliferation of cyber threats, security? What keeps you up?
I sleep well at night, thank you very much. But I think the biggest concern for us is also looking at how technology can really disrupt your business, and waking up one morning to realize that you've become old school. And so it's always a continuous balance, working within the boundary of regulation to maintain competitiveness. I'll give you an example. The stock exchange has 4.5 million clearinghouse numbers. That means unique clearinghouse accounts. Many people have different brokers. Somebody might have a brokerage account at AfroInvest and another one at Meristem, but actually those shares will settle in the same clearinghouse account. So the 4.5 million shows there are 4.5 unique owners of securities, including corporates and individuals. And on the retail side, we have, at any point in time at AfroInvest, say 100, 200 customers trading in a day. Then the other day I checked with some of these people that sell FX trading. Now you would think that in a country that's going in a recession, that the average retail customer will be very scared of trading currencies. But surprisingly, there are about 250,000 retail customers that log in every day on iPhones, Blackberries, laptops, iPads to trade currencies. What do they understand about the movement between the US dollar and euros? Who knew? What's happening is that a group of Eastern Europeans have come into Nigeria, set up shop, and are very quickly attracting customers to go into the bank and change 45,000 naira into $100 and come in and pay them so they can be able to trade currencies. And this is very attractive, yes, and it's totally unregulated. Again, some of these issues about regulators not catching up with what is going on. So for me, there I am saying that my brokerage business cannot make enough money to sustain its own fixed costs, its own direct costs, talk less of shared costs. But I can see that there are people who've come into this country, parachuted in by night, don't have to pay any regulatory fee, and they are booking in literally millions of dollars in profits. And the number of such firms that are large today is about 10 of them. There's only one that is probably well regulated, which is Eagle Global Markets, that has a license from FMDQ and has applied to the SEC. But they are just one of the only few ones I know that's well regulated. And so we are now trying to say, well, if I can only attract 100 people to trade shares in the afternoon, and there are 250,000 willing to trade currencies, I must be able to introduce something similar. So you can see now how technology is moving you, and we've just about developed a Naira-based version of the same business to allow our customers, if they are so inclined, to come in and trade the direction of oil, or euros against dollars, or sterling against the yen. And this is just one of those issues that you continuously have to face.
As we go digital, and we're talking about going digital, one of the key things that is a driver for influencing that is data privacy, data management, and even data security is one of those things that is so key as we go into this route. So as we look at the legislative environment, right now we don't have any formal legislation as far as data privacy goes. But what are you doing as industry heads to influence any legislation that is coming, because I'm sure it's coming? And what key things would you like to see as industry heads in that law that will be a key driver and enabler for business rather than another roadblock, especially with what was discussed about having fragmented laws that are working at cross purposes of each other? So what are we doing as industry to make sure that if any data privacy laws come in, that they are a key enabler for the industries at large?
Gentlemen, did the question come through? Okay.
Yeah. Save the worst for last.
Okay, I'll go first. The only thing I would say about compliance is that compliance, from a banking perspective, I mean, from my own perspective, is like HR. So a few years ago, HR was just seen as an administrative department. Now it's more strategic because people are very key. And I think the same can be said as compliance, especially in this day and age. And so we're now beginning to look at compliance from a strategic perspective. So we're looking at how do you integrate. So it's not just about having a compliance office somewhere, but it's by weaving it into all your processes, people in the organization, and the impact that it has. Because regardless, whether we like it or not, we're now part of a global economy, and so even if I do not have, even if I do not have any external businesses outside Nigeria, my customers actually do interactions on their mobile phone internationally. So we are beginning. I think for us, what we're trying to do is, first of all, how do you come up with a compliance strategy from administrative? So instead of looking at compliance from a regulatory perspective, it's now looking at it from internal compliance and conduct. But then again, it is also trying to now agree with the different stakeholders, because we have a lot of stakeholders. We have FRC, we have this NEC, SEC. We have a lot. It's actually working with them, which is a lot of work, and agreeing a playbook that will be cost effective, but ensure that it is sustainable into the future. Because sometimes what you have, compliance can be very, very expensive. So if it's too expensive, then sometimes people just say, okay, just take back my license. I'll go and find something else to do, because you just can't, it just doesn't make sense. And there's some businesses and there's some licenses that are in danger of going in that direction.
But I also think that the regulator has done a far better job with compliance than they've done with privacy laws, for instance. So we've had to rely on banking regulations and banking laws for privacy on the data side. It's clearly not sufficient. It doesn't cover. The problem with us trying to influence regulators and lawmakers to change, to write rules around privacy, is that when you then come face to face with the battle against corruption, all your argument falls flat. So today, irrespective of my debate around how privacy laws are important, if the EFCC chair make a case for certain things, I think I would lose that argument. So it's important that we deal with some of the problems around corruption before we can push the government to look at issues around privacy. It's not going to happen. It's a fact we already know. So it's important that we collaborate to give them confidence. I mean, BVN, when I said it earlier, it has given them some confidence around the banking sector side. They have had far more successes with banking sector assets than they are going to have with capital market or with real estate, for instance. And so that has to happen before the privacy laws will become a priority for government.
That's it from this CNBC Africa special on the 2016 Oracle CEO Summit. I am Wale Famrewa. Thank you for watching.